Welcome back, everybody. And in today's episode of the Brisbane Property Podcast, we have special guest Eliza Owen, Head of Research at CoreLogic Australia, and we are going to be dissecting many reasons why Brisbane has been one of the top three highest performing markets around Australia in recent times. We're going to dive into the fundamentals of supply and demand, so this episode should not be missed.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And we've got a guest who we've actually had on before on the show, and it's always great to talk to Eliza Owen from CoreLogic. Welcome.
Thanks so much for having me. It's great to be here.
And for those that don't know, Eliza is the Head of Research at CoreLogic Australia, and Eliza's appeared on 2 previous episodes of the Brisbane Property Podcast, and we're always very appreciative of the time that you actually give to our audience and also the intel that you share with our audience. So you were last on the show in episode 186, which was in December 2023. And prior to that, you also appeared in episode 118 in August 2022. And I'm reflecting back because when I consider August 2022, wow, market conditions were very, very different here in Brisbane compared to what is happening here today. And we can talk a little bit about that in the episode that we're going to be recording right now. But CoreLogic have also dedicated a lot of time and research into research that looks at what's happening across multiple markets throughout Australia, and we're really going to be taking a deep dive into some of that data today. So it's going to be a valuable episode for anyone that is tuning in. So we hope you enjoy this episode.
I'm sure it'll be filled with data as well. And I always joke on this one, Eliza, I'm sure you'll fit into the category. I call Melinda the data nerd. So I think between you two, you'll throw a lot of information out to our listeners and keep them up to date with what's happening in the market as well.
So, Eliza, property markets have just at the end of June, in the first 6 months of 2024, hit a new 14-year record high throughout the country. But as we all know, and as we've reported here on the Brisbane Property Podcast, there are a lot of different markets, especially capital city markets around Australia, that are moving in different ways. There's diverging growth trends, and these are becoming more and more obvious. But can we just start by asking what capital cities or which capital city markets have been outperforming since the onset of COVID?
So the standout performers since the start of the pandemic have definitely been Perth, Adelaide, and Brisbane. Each of these capital cities have seen value growth of over 60% in the past 4 years, which is a really exceptional rate of growth. If you think in terms of the dollar value increases as well for the median dwelling value in Brisbane, it's the equivalent of a $327,000 lift in the median. And we've also seen that kind of changing of the guard with Brisbane overtaking as the 3rd most expensive house market of the capital cities and the 2nd most expensive unit market in terms of median value.
Yeah, it's a big shift, isn't it? And when you've just quantified that in a dollar value, that makes it even more of a surprise for some people that haven't been in the market actively tracking what is happening. And I know many of the clients that we represent, for example, if you've not been in the market really understanding what's been happening in the last 4 years or so, it comes as such a surprise in terms of what their money or what their budget will actually buy. And I think that's probably the big surprise for a lot of people. So you've mentioned in excess of 60% growth throughout Perth, Adelaide, and Brisbane over a period of 4 years. Has there been another period of time in the past where we've seen such strong growth in such a short period of time? And I've probably, put you on the spot with that because there perhaps has been, but it seems like very, very strong growth.
Yeah, so it comes off the back of a decade of quite slow and steady performance in those Adelaide and Brisbane markets. So if you compare the past 30 years on average, annual growth across Adelaide and Brisbane has been sitting at about 5% per annum. In the past financial year, values were up 16% across Brisbane and about 15.5% across Adelaide. The Perth market shows a similar kind of trend where average annual growth has been 5% a year for the past 30 years on average. But unlike Adelaide and Brisbane, it wasn't a slow, steady growth pattern. And so for Perth, it would have been around the mining boom of the late 2000s, early 2010s, the last time that you saw such an extraordinary uplift in value. Perth has historically been much more of a boom and bust market, whereas Adelaide and Brisbane, it was slow, steady, slow, steady, slow, steady, and then boom. I think the big transformation for those cities has been the pandemic period in particular, where people have become less tethered to Sydney and Melbourne central business districts and have realised the relative value across southeast Queensland.
It's an interesting observation that you've made. Now, obviously, with some markets outperforming others, despite broader economic conditions being quite similar, we've had obviously rising interest. We come off the back of COVID where interest rates were at record lows. We then saw a period of the fastest interest rate hike in history, I believe. Is that correct? Yes, that's right.
Yep.
And then off the back of that, we've seen interest rates stabilize, but at a much higher level than what we experienced during that COVID period. At the same time, we've got inflationary pressure. So the cost of living has also increased. And obviously, we've had this huge influx of people from population growth as well. So this has all been happening at a national level. We do know that there's going to be more local drivers. Not everybody that relocates or comes into the country goes to the same location, for example. But what is it, therefore, that's causing this divergence in performance? Is there information that you can share with our audience that helps people to understand what are the driving factors for growth in these three markets specifically?
Yeah, so you're quite right in that there's a big range where you've got Perth, Adelaide, Brisbane performing really strongly. Smaller markets like Hobart, Melbourne, and the ACT are basically flat or falling. And this is the biggest variation we've seen in growth in at least a decade. We've never seen the growth performance kind of fan out as much as it has. So the biggest determinant that you'd look at to explain that capital growth trend is the supply and demand dynamic across different markets, which sounds very intuitive. Just to give you an idea of what that's like, for Brisbane, over the past 12 months, we've observed 55,000 sales of residential property across the market. So that is demonstrated demand of the people that wanted to buy property, successfully bought property. But in the same period of time, that 12-month period, there were only about 47,000 new listings added to the market. So you had more sales than new listings pop up over time. That creates a sense of urgency. It whittles down total stock levels. And it basically pushes up prices because there's more competition for the available supply. On the other end of the spectrum, you've got a city like Melbourne. There were 98,000 properties added to the market for sale in the year to May, but there were only 85,000 sales that occurred in the same period. So there wasn't enough demand to absorb the supply that was added. And that's where you get buyers with more choice, more time, and more power at the negotiating table. And so that's where you get cities like Melbourne with a drag on value and cities like Brisbane with accelerating really strong rates of growth and competition.
That's a really important observation, and it's something that, I know through our inquiry, when we're representing buyers that are not here in Brisbane, and perhaps they might be from Melbourne, other markets where there is a lot of choice and there is a lot of stock on the market that's available, and there's therefore less urgency to buy, they're really surprised as we educate them around the speed of our market and the level of competition that exists in our market here in Brisbane. And you've highlighted there a really important point. So when there's fewer sales compared to new listings being added to the market, what you see is more and more listings sit on the market. They become a little bit older, but it gives buyers more choice. So when a buyer enters the market to come and have a look at a property, there's less urgency because there are more properties available for sale than there are buyers in the market. And you've rightfully pointed out there, and certainly, if that's what's being reflected in the data, it's what we are seeing on the ground, there are more buyers than there are properties for sale here in Brisbane. And what that creates is a much higher sense of urgency. The speed of the market is a lot faster. And I know that's coming through in days on market indicators that CoreLogic have actually or do publish month on month. And therefore, buyers have to be in a position to move very quickly, and they have to be prepared to compete with other buyers. And of course, that's what puts that upward pressure on prices, simply because in order to buy, you cannot negotiate a bargain if there's 5 or 6 other buyers that also want to purchase that property. And that's a really important concept for buyers to understand. The level of stock in a market or new listings available will determine, to some extent, the level of competition if demand remains, constant. If you've got lower stock with constant demand, you're going to get more competition. If you've got higher stock with the same level of demand, you're going to get less competition. And ultimately, that can have an impact on the prices that people are prepared to pay as well, through the ability to negotiate or the ability that you have to compete and stretch.
It's definitely still reflected in days on market data as well. So for the June quarter, properties spent an average of 39 days on the market across Melbourne. It was about half that in Brisbane, just 20 days in the June quarter.
It's really interesting.
We get that a lot with clients or people that talk to us and just say, oh, look, I wouldn't mind having a look at the property, or I'm not quite ready. Can I wait and have another inspection? Things like that. Most of the time in Brisbane, on good properties in good locations, they'll be advertised and they'll probably be sold that weekend. They do move really, really fast, and the people just don't have that time. Eliza, it's interesting when we look back at the pandemic, and I always sort of look back and reflect and think, it was all doom and gloom. The world had just sort of stopped, which is really hard to understand when you look back at it now. Brisbane had strong growth since the pandemic. What's happened past that in the last sort of 6 months from what you've seen in CoreLogic?
So the rate of growth across the Brisbane market is still very strong. So on an annual basis, it was the second strongest performer of the capital cities. On a quarterly basis, it's the third highest performer. So in the June quarter, Brisbane home values were up 3.7%. That's behind a 4.7% increase in Adelaide and a 6.4% rise across Perth. And ultimately, the quarterly growth rate has slowed a little bit from this time last year. The quarterly growth rate was 5%. So it's maybe you could describe it as going from white hot to red hot in that sense, in that it's still a very high demand, high growth market. But inevitably, we are coming to a point where interest rates remain relatively high and economic conditions are gradually weakening. That unwinding is definitely happening faster in New South Wales and Victoria, where I think people are struggling a little bit more with affordability constraints, higher mortgage payments. But eventually it's going to hit Brisbane as well. I think part of that is as Brisbane becomes more and more expensive and gradually starts to overtake cities like Melbourne, still a long way off Sydney in terms of price point. And, we can talk about that as well. But I think eventually the reduction in the premium between Sydney, Melbourne and Brisbane might affect interstate migration trends and decisions to buy. For now, there's very little sign of that tapering. It's just that strong quarterly growth rate coming off the boil a little bit.
Yeah. One thing I'd like to also ask you, Eliza, in relation to supply, obviously we've talked a lot about new listings, and that is an indication of immediate supply in a particular market. I know some of the research that you've conducted with CoreLogic in relation to longer term supply looks at building completions. What's happened in different markets around Australia in terms of the completion rate? Because if you're building a lot of new homes in a particular area, that's also going to add to supply, and it's also going to give buyers a little bit more choice because they can buy brand new or they can buy established properties. Are you seeing any differences in completions across different markets that could also explain this change in performance in recent times?
Yeah, so one of the factors that we think has actually contributed to a weaker market in Victoria is the fact that it's just had more dwelling completions over the past decade. So Victoria led dwelling completions for most of the 2010s and since the start of the pandemic. And when you have more new supply, that means it is at a greater capacity to absorb demand and creates less urgency and competition for prices as well. In Queensland, we saw dwelling completions actually peak back in 2017. Those who have been operating in the market for a long time would be very familiar with the kind of boom in off-the-plan apartment development and a little bit of a supply glut in the unit sector in the late 2010s. But really, since 2017, completions have been moderating. And one of the challenges that we have when Australia has a need greater than ever for just places to live is that a lot of the factors that have played out in recent years through the pandemic have meant a big constraint on the construction sector. So broadly speaking, dwelling completions are declining, sitting much lower than their peaks, and that has to do with an increase in construction costs, a massive surge in demand for new property from the home builder scheme that is still being worked through the pipeline 3 years later, and a shortage of construction labour as well, with a lot of labour and I guess resources more generally being stretched across things like government infrastructure projects, as well as that big pipeline of residential construction work. So it's, in a perverse way, it kind of helps in terms of increasing value, restricting supply through the constraint on the construction space. But as a nation, we're seeing our government really put a lot of emphasis on trying to increase builds, and they definitely recognise the need for new housing stock.
And it's a really tricky situation. And for example, when someone's looking to build, there's the cost to buy the land, there's the cost of construction. And of course, we've seen those costs significantly increase off the back of COVID. Labour costs are continuing to be a little bit unstable in that construction market. And of course, it's the feasibility of some of the larger attached dwellings, getting them out of the ground, because there's so much uncertainty with foreign investment being reviewed more recently, stopping that foreign investment coming into these markets. And of course, we know and understand that developers that are selling larger projects do need pre-sales to get them started. And so there's also a hesitancy from some local buyers in terms of buying off the plan. And all of this contributes to a slowdown or a breaking of the delivery of this new stock. It's not just about the slowdown, but it's also about the cost, because people are weighing up the cost of buying brand new versus buying established. And because the cost of buying brand new more recently has significantly increased, developers have to recoup that cost in the sales proceeds. So it's a really difficult situation because we need new stock, but the cost to deliver is significantly increased. The consumer may no longer be prepared to pay that premium that's required for brand new. So they're looking at that established market. And of course, that's shifting the demand into those properties that are available now. And again, that's exacerbating this situation. So you've pointed out that Melbourne's had a lot more completions more recently than some of these other states, and that Brisbane completions, they peaked in 2017 off the back of the change in a city plan that we had in 2014. It caused a lot of high density development to happen very, very quickly. And since then, those building completions have been declining. In other episodes, we've talked to town planners about some of the issues about bringing new stock to the market, about aggregating a number of sites to enable higher density development to happen as well. And there's so many constraints around that. So this new supply pipeline for Brisbane is very unlikely to change in the immediate future. And it's something for buyers to be aware of. And therefore, that demand is going to continue to be focused on that existing stock for all of those reasons that we've outlined. I will say that premium end of the market, especially in attached dwellings, but also detached dwellings, that seems to be very strong in terms of the buyer demand for that type of product. But for your general product that appeals to your first home buyer or families, it's a much harder product to deliver to the market. The other thing I'd just like to mention, interstate migration trends. Obviously, when we've got migrants continuing to relocate, and we've seen a peak and then it's come off slightly now into Queensland. If people are relocating, for example, from Sydney, where incomes are higher, it's still a much more affordable option for them to come here into Brisbane. And when they look at what they can buy potentially within the inner 5-kilometre ring here in Brisbane, perhaps on the river or with uninterrupted city views, and they can establish that that's what their budget buys in Brisbane versus what a similar budget would buy in Sydney, they're still seeing Brisbane as an affordable option. And again, that's potentially some of the reason why we're seeing this continued demand in the Brisbane market, especially from those interstate buyers. We've also seen the ABS data on lending come out recently showing there's more Queensland investment or loans being produced now or being written now, which means that there's more interest in Queensland as a whole from an investment perspective. Are you seeing similar trends, or what's your comment in relation to that?
Yeah, 100%. So the migration position for Queensland is insane. It's a complete turnaround from this pre-COVID trend where the net movement from other states and territories to Queensland past 5 years prior to COVID was averaging about 20,000 people a year. At the height of the interstate migration trend, it shot up to about 51,000 in the year to March 2022. So that's more than double the historic annual average that you would expect from interstate migration, which, talk about supply and demand. You'd have to imagine that that's a real shock to developers, planners, real estate agents, councils who just aren't anticipating that kind of uplift in the population. As you say, it has moderated, but it hasn't come down to pre-COVID levels. In 2023, annual interstate migration was still sitting at 32,000 for the year to Queensland. And as you say, it continues to really be coming from the southern states, so New South Wales in particular, where you have this extraordinary gap between a typical dwelling value across Sydney, house value sitting at 1.4 million at the median level for Sydney versus about 930,000 for Brisbane. So that premium is probably still attracting people for the house and land in particular. And then on top of that, you add overseas migration, and net overseas migration nationally and across each of the states and territories is generally at a record high. For Queensland, it's sitting at 88,000 over 2023. So you're talking about over 2023 alone, that's about 120,000 people that you've added to the population who need somewhere to live. And that's not accounting for new households being formed within the state, people moving out of mum and dad's and establishing a share house or buying a family home and moving out of a share house. So there's all of this drive for household formation across the state. And from the migration picture alone, if you assume 2.5 people per household, in 2023, you would have needed 48,000 new dwellings to accommodate the addition to the state from other states and territories and from overseas. And instead, the completions were sitting at about 33,000 over the year. So again, that just shows you the magnitude of the mismatch between supply and demand. There's no sign of interstate migration going back to pre-COVID levels. The overseas migration position will eventually normalize. But at the moment, it's just something that is probably still continuing to drive those really strong growth rates across the state and across Southeast Queensland as well.
So as well as population or the movement of people, both from interstate and overseas, and you've talked about the formation of housing from those that, are already here in Brisbane and just looking to upsize, downsize, move out of home, form share houses, etc. Based on the research that CoreLogic conducts, is there anything else that's underlying the position for Brisbane for the foreseeable future in terms of those supply and demand metrics?
So I think from a demand perspective, there's as you alluded to earlier, the room to grow across Brisbane and Southeast Queensland, the fact that on a relative basis, when you're comparing like for like, Brisbane still presents a lot more value. So I was looking into some of the fastest growing areas for Brisbane the other day, and part of it is the cheaper or just more affordable areas where people can still afford to buy in. So Logan, Bedesert, those sorts of areas where you've got really strong growth rates. But there's another pocket of growth in that kind of Geebung, Chermside West, where detached median house values we put at about $1 million, which sounds expensive, and it is expensive. But if you're looking at the equivalent of 10 kilometres north of the CBD in Sydney, you'd have to pay $3, $4, $5 million. So from that perspective, the convenience, the quality, the size that you're getting across Brisbane is still great value for money. So one of the intermediating factors there is how feasible is it for people to keep moving to Brisbane? Can they still have their, job? Can they do it remotely? Can they get a new job locally? When we think about the population boom, the additional infrastructure that's going in, and all the additional demand that you get from a rising population, there are going to be plenty of local job opportunities that continue to grow and flourish. That's also reflected in labour market figures. The number of people employed has grown most across WA and Queensland since the start of the pandemic. And then there might be a slight tweak once the labour market loosens up. It may be less feasible for people to work remotely. So that will be something to watch out for that will affect demand and the ability to move interstate. But I think in terms of new job creation, that continues to be a really strong driver as well.
It's really interesting because a lot of people talk to us about the impact of the Olympic Games. It's been announced. We all know that is coming. It's still, 9 years away at this point in time. 8 years away, I beg your pardon. However, it's not the Olympic Games as such that's going to change anything for Brisbane, but it's all of the infrastructure development, the economic development that will happen between now and then, but also during and after, that people need to be aware of. And you've highlighted and pointed out some of those important things with the infrastructure boom. A lot of infrastructure that was already in the pipeline, it's being fast-tracked, it's being brought forward, which obviously, as you've also pointed out, creates jobs, creates economic activity. It actually boosts the local economy in ways that it wouldn't otherwise be doing. So these are the things that obviously make a big difference to property markets in a local area and confidence in a local area as well. And it's one of the things that is potentially putting Brisbane on the map for investors from outside of our area that are hearing about what's actually happening.
Eliza, I just listening to everything that you've sort of talked about, and this is something I know Melinda and I have mentioned. We recently did some traveling overseas, and what we noticed a lot, and this is something, it does reflect a bit on what you've talked about here. And what we noticed is the way that people in other countries live in more high density, and they have their apartment, and then there's food places, there's cafes, all those types of things around. The places you've just mentioned about the Logan,
growth areas,
Beaudesert, Geebung, Chermside West, those areas, you're still talking about a house. So you're talking about a dwelling, whereas in Brisbane, we don't tend to have that unit living, I guess, like when you've got overseas. I think you said 88,000 people, was it, migrated for overseas in 2023? Majority of those people are probably used to living in smaller, compact areas like units. And we don't in Brisbane. We're used to that big backyard with a game of cricket and kick the footy around and things like that. We're very spoiled, I think, in the amount of land that we actually use. And I think we do use a lot of land as opposed to making the most of that land. Do you think that's something that could change? I mean, I think, as you said, construction costs are up. There's a lot of things that are putting pressure on that. That 2016, 2017 boom, that was about the peak of the unit boom as well. And we haven't really produced that product.
Yeah, and part of the appeal of having a house is that if you don't have a lot of that amenity and commercial built into your community, you rely on having a coffee bar at home and, a home theater and a lot of the entertainment and things like that. And at the end of the day, the detached house and land will always provide more value. Houses have a higher rate of profitability from resale and a higher level. However, it has to change from an affordability perspective. At the onset of the pandemic, the difference between a median house and unit value across Brisbane was about $150,000, and that's now blown out to a gap of over $300,000 between a median house and unit value. So from an affordability perspective, it has to shift back to the unit sector. Interestingly, in the past 3 months, we have started to see growth in unit values overtake the house segment in Brisbane. So in the June quarter, unit values were up 5.6%, house values were up 3.3%. So again, strong growth rates across both asset types, but units are seeing increasing popularity, and that could be why.
Yeah, affordability. We've actually been, reporting on the fact that the unit market in Brisbane has outperformed the house market over the last 12 months, 6 months, 3 months. And we've seen that on the ground. We've seen, the demand for people wanting the townhouse product or the unit product, especially the lower density, walk up 3-level type setup. There's so many people wanting that type of product in Brisbane compared to that high density, although we have seen some of the demand shift to high density just purely for affordability, I would say, as one of the driving factors. But that's really interesting that you've mentioned that the price differential between a house and a unit from pre-pandemic to now, and that's actually grown even off the back of some really, really significant growth in the unit market in recent times. Can I ask, do you see any risks in Brisbane as a market in the foreseeable future?
In the very short term, it's hard to see things changing. Stock levels are so drastically below where they've been historically and are so drastically low relative to demand that I think the cycle for Brisbane is going to remain pretty strong in the next sort of 3 months. 6 to 12 months, I think you'll start to see some of the weakening economic conditions flow through to housing demand.
Mm-hmm.
So, and this is very macro level stuff. It's something that's going to affect all housing markets. But if you take, for example, the household savings rate, which went from peak pandemic lockdowns, June 2020, households were able to put away 24% of their income as a whole sector. And you think about how that flows through to, all of a sudden I have all these savings, I have a home deposit, I have, money to spend on furnishings and whatever. Now that we've been through this high inflationary, high cost of living, almost hangover from the overinsurance that we got through COVID, the household savings rate is less than 1% through the March quarter of this year. And so that means less demand for new housing, less ability to save up a deposit. We've also seen things like reduced household spending. The Consumer Sentiment Index reported by Westpac and the Melbourne Institute continues to be at recessionary lows, and households under that survey as well are anticipating at least one more rate hike in the next 12 months, the majority of those surveyed. So that doesn't scream confidence for buying a dwelling.
Mm-hmm.
We're seeing more and more demand is skewed to the cheaper pockets of the market. And again, that's going to keep happening until even those cheaper pockets are exhausted. So, but it's all cyclical, and it's all a reflection of what we have to go through to get inflation under control right now. So there's the cyclical aspect, and then there's the structural aspect. And the structural aspect are the things like the infrastructure investment, the Olympic Games, the change in the perception of Brisbane as a place that you can feasibly move to and work in following the pandemic. And those are the things that's going to drive and hopefully maintain the long-term value that's been realised in the city in recent years.
It's a really good observation, and you've pointed out the difficulty in the ability for those people that are saving the deposit now. Of course, we've recently had a change in the first home buyer threshold levels here in Queensland. So You used to be able to get stamp duty concessions on a purchase up to $500,000 just in the month of June. That has now changed to purchases up to $700,000. Admittedly, given the median house price here in Brisbane, it's going to still exclude a lot of houses, but it really does open up that unit market where the median house price is less, or rather the median unit price is less than this threshold. It's going to potentially cause some more elevated demand on those properties that are available up to that $700,000 threshold. But more so than that, there's going to be a very large portion of the population who have a very strong equity position. And I think CoreLogic's recent pain and gain report indicated in Brisbane, for those properties that sold up to the end of March, I think 98% were profitable sales, meaning that for anyone that has sold a property, they're going to be selling for a higher amount than what they actually paid. So what that tells me is that there's also a large portion of the population that have a very strong equity position. And I know with the elevated property investment spending here in Queensland, we're seeing more and more people tap into the equity in their home or in their portfolio to continue to build the portfolio. Do you think that as we move into the future, we're going to see more of this, the haves versus the have-nots, those that are already in the market and have so much equity to be able to continue to build their portfolio versus those that are really struggling to get into the market and they're still saving that for their deposit for their first home? How do you see that playing out in the future?
Yeah, I fully agree. Unfortunately, the double-edged sword of a rising market is that you add to the windfalls of capital gain that homeowners have, but it means that prices become more out of reach for those who don't have the asset behind them that's growing as quickly as the housing market, whether that's a dwelling or what other investments or endowments or inheritances and gifts. So it creates a divide between, as you say, the haves, the have-nots, and those who basically have access to wealth versus those that don't. And we're seeing, interestingly as well, of the pain and gain report, we did analysis on the gains for house sales versus unit sales. And Brisbane houses had a median nominal gain from resale of $400,000 in the March quarter.
Wow.
Versus $170,000 in the unit sector, which is still a great result across both property types. But there's almost this new emergence of haves and have-nots among house owners versus unit owners. Having said that, the unit sector has recovered incredibly across the Brisbane market over the past few years, hitting new record highs and now outpacing growth in houses. So the rate of profitability across the city was sitting at 98.5% for the March quarter. So 98.5% of sellers made a gain. And that's the highest of the capital cities, tied with Adelaide. So again, it's a really good position for sellers for sure.
And it gives buyers confidence as well, to some extent, buying into a market. I know when you look back at the 10-year performance for Brisbane, in terms of capital growth, Brisbane has ranked second behind Hobart, which obviously we know Hobart's really come off more recently, but had some very strong growth in the years prior to the last couple of years. So, when we're looking at the past 10-year performance, the past 12 months, 6 months, 3 months, Brisbane still remains in the top three, regardless of how you're dissecting that data. And with the, prospect for what is still coming and the current underlying fundamentals of supply and demand, we're really seeing a market that, it's hard to see how the handbrake can come on, quickly because of the underlying fundamentals. Do you agree with that analysis?
Yeah, 100%. Yep. I think it's just a market of extremes right now in terms of the supply-demand mismatch. As you say, it's hard to see that changing overnight. I think, though, we should brace for a longer-term cyclical easing across the market that just, again, comes out of weaker economic conditions.
Absolutely. Eliza, this has been a really valuable conversation, and I want to thank you for sharing all of the latest research that CoreLogic has been doing across various markets and really taking a deep dive into some of the information relative to Brisbane. I know our listeners will really value the information that you've shared. So thank you so much for, putting the time in again to share and chat with us.
Yeah, thank you for giving me an opportunity to talk through all the reports. And anyone who's interested in downloading them, of course, you can just head to corelogic.com.au/news. And we have all of the latest research and articles. There's usually like a supporting PDF report there as well.
Wonderful. We'll definitely include that link in the show notes as well.
Excellent. Thanks, Eliza. Look, I'm sure that was a lot of information for everyone. There's a lot of growth that's happened there, as you've said. I think in a bit of a summary, I think if you can afford to get into the market, get into the market, because I think the prices, as you sort of touch on, with that demand side of it, prices are going to be pushed further and further. I think that's going to make it hard. Mum and dad bank might come into play, I think, for some people.
Already is.
It is at the moment, and I think that'll come into it more. But yeah, look, thank you so much for taking the time to have a chat. As usual, I'll let Melinda wrap things up and we will talk again next week. Thanks very much for listening and bye for now.
Yes, thank you again, Eliza. We really appreciate your time today.
Thank you.
As always, we hope you have enjoyed today's episode of the Brisbane Property Podcast. If you have enjoyed this content, please don't forget to leave us a review, share the episode with friends and family. And as always, we look forward to speaking with you again next week. Thanks so much and bye for now.